Hello, hello, Susanna. How are you?
Joe, I'm good. Happy Sunday. How are you?
Happy Sunday. Happy Sunday. Yeah, it's been a minute. I was out of town, but I'm back and definitely want to talk to our growing audience with Commercial Real Estate Investor Club. Sound good?
Yeah, absolutely.
Cool, cool. So I definitely want to talk a little bit about the market update. So if you're watching this, depending when you're watching this, there's a lot of different information going online, and depending where you're located, I'll probably hit something up that's kind of relative to where you're at. And definitely, Susanna, I love what you said earlier. Definitely want to hear what's going on in Arizona and some of the real estate agents you're talking to. So before we let this go too far, I want to remind everybody about this upcoming event that we're having very, very soon. And definitely want to make sure you guys get registered because this is a no brainer, ladies and gentlemen. So I'm going to share my screen, go through a couple slides. And folks, if you haven't registered, like I said, be sure to register ASAP because this is such a crazy bargain for less than a gym membership for less than $1 a day. You're going to hear some exciting information about commercial real estate. We've got incredible information coming from myself and also Susanna. So let me just kind of go through these slides. Could you see my slides, Susanna?
Yes.
Perfect, perfect. So, ladies and gentlemen, on June 20th, online in the comfort of your own home, check out this 1 day intensive. We did have a live intensive in Covina not too long ago that you could find a little sneak preview on YouTube. However, we want to have a larger reach. So we're taking it online. We want to go as far nationwide as possible to invite you as our audience. Okay, our featured speakers on the top left is Jesse. In the middle, of course, is world famous Susanna and myself. We are the featured speakers, but guess what, ladies and gentlemen? We have added attorney Bill Bronchick, who is a pro. He's a multiple book author, a definite person to read, listen, follow. He'll be one of our featured speakers, and he's a pro at creative financing. Subject to, we have Eric Rhodes, who's a Texas commercial real estate pro as well, who has just been added to our group. Okay. So on June 20th, ladies and gentlemen, from 10 a.m. to 2 p.m., Commercial Real Estate Investor Club online, our intensive boot camp. What you'll learn, the A through Z nuts and bolts of real estate, financing commercial real estate, finding hidden deals. If you're a licensed realtor or want to become an investor, we're going to also go into that as well. Okay, so here's the QR code. You can scan it, you can get information, or go ahead and register it. And like I said, for only $27, folks, that's an absolute no brainer. And here's one of the things that I do know about commercial real estate is alone you will go fast, together we can go far. Commercial real estate investing is a group team sport. So we'd love for you to join us. Okay, so check that out. I'm going to go ahead and stop sharing and switch it back to you and I, and kind of go through some of the other updates I had in store for our guests. So let me go ahead and share a couple other things that I wanted to share. All right, folks. So check this out. So we can both talk about this for sure, Susanna. Residential, Quicken is one of the biggest lenders out there. You have Quicken loans, and you could see here about the interest rates. They don't seem to be moving, folks. So just, it's one of those things, what we say in residential real estate all the time is date the rate, marry the house. Date the rate, marry the house. Because there's going to be a time when the rates will drop. And kind of my rule of thumb, folks, is if it drops 1%, that's a no-brainer to refinance because typically the numbers work out very, very well in your favor. I saw a post, Susanna, which kind of threw me earlier over the weekend, and somebody posted in some random real estate group, "Hey guys, I'm looking for a house that has a 1% rule." And when I saw that, I kind of like made a little comment. I go, guys, 1% doesn't always work. You should take it a step further and learn about timur, TIMMUR. And in their commercial real estate investor club live intensive, we will be talking about that, because some people don't factor in taxes, insurance, maintenance, management, utilities, reserves. And that's timur, folks. That 1% rule is so basic and could get you into a lot of trouble. Won't you agree, Susanna?
Absolutely. I mean, we underwrite to those numbers, but it's so crucial that the investor is aware of those numbers and is able to kind of make their own assumptions on what that's going to look like. And then I would say even over and above those assumptions, also have access to emergency, because you never know what's going to happen. Real estate is a great investment game as long as you can weather the storm.
I totally agree, folks. And what we look for typically, folks, in commercial real estate is a 1.25 rule, not the 1% rule, because when you factor in what we call the debt service coverage ratio, we're looking at 1.25. And so if somebody's posting a 1% rule, well, that almost disqualifies you in commercial real estate.
100%.
So be careful. Be careful where this advice is coming from. Susanna and I are both very, very seasoned professionals, and that 1% rule kind of out the window, especially when you get into commercial real estate. So let me share a couple other things that I saw, folks, that were, just out there. So you could look this up yourself, folks, and you could see what's going on. And one thing that I really enjoy about commercial real estate, or real estate in general, is it's not just very microscopic. So opportunities, folks, could be anywhere, everywhere. Just because it's terrible in one part of town could mean it's incredible in another part of town. So like, I'll show you something here that I saw that's going on in Portland, and you guys could take a look at my screen. I'm going to do a share screen again. And like I said, this is online. You could just plug it into your computer. Legal lessons from Portland's commercial real estate uncertainty. So this was in businessjournals.com, an author by the name of Kyle Grant. He talks about the only certainty is uncertainty. Okay. This is not a call for panic, but rather a call for balance. Now is not the time for the better firm risk, nor is it a time for total retreat to the safety of the sidelines. So he talks about Portland market, what's going on over there, super high vacancy rates, and negative net absorption. So check this article out, folks. And like I said, just because it's, not so good in one part of town doesn't mean that all parts of town it's doing terrible as well. Because like I could tell you, maybe a few months ago, San Francisco downtown market, the market was realizing over a 30+% vacancy rate in office in downtown San Francisco. However, what we saw most recently was a spike of people coming back into the office and taking up some of the space because of the AI, the artificial intelligence, and some of these firms just kind of starting to grow and catch wind of what's going on. And guess what? They want some people where they could monitor, work very, very closely. So they're actually taking up office space. Here locally where I'm at in San Diego County, California, retail is starting to see a rise. Multifamily is starting to see a rise in growth, consumer confidence, what have you. And so a big thing about that, folks, is use some common sense. When you see jobs go up, that means people have the ability to pay. And so when they have the ability to pay, they could pay for rent, they could pay for mortgage. So specifically here in San Diego County, North County, kind of where I'm at, in the city called San Marcos, there's Cal State San Marcos, and all around it, buildings are going up, cranes are going up. Lennar is just buying all these parcels of land. So the economy, especially in San Marcos, is really starting to thrive, folks. So really pay attention. Again, sometimes the news is there to scare you and spook you out. Don't pay attention to that, because I'll tell you what, where there's adversity, there's opportunity. Turn these lemons into lemonades. What do you think?
Joe, the only thing I would add to that, it's so interesting how you said, within one city, you can have pockets that are doing well and pockets that aren't doing well. And it's important for investors to know this information, because if somebody is really interested in mostly asset preservation, which real estate is such an awesome vehicle to do that, because it's a long-term strategy, right? You can buy in the best areas that are maybe super hot and hard to get into because they're expensive, cap rates are low, and there's no vacancy, all that. But if you are looking to do value add, or you have investors and you have to have a higher return on your money, look for those pockets that are maybe down and out. Because like you said, San Francisco was a great buy a few months ago, but now it's starting to turn. So depending on your strategy, that's how you also determine what your buying strategy is and which location, even within a single city, you're going to look at.
I agree, Susanna. And I'll tell you what, like, strategy is very, very, very important, because not every single person has the same kind of financial resources, income earning potential, what have you. And I'll tell you what, some of the folks that I deal with, they make a lot of money, and they actually are okay with negative cash flow. I mean, I ran into a client, Susanna, the other day that he owns, God, it was like a 20,000 square foot building, 5 stories, Susanna, and check this out. It's been vacant for years. Years.
How is that even possible? I'm curious, because don't the lenders ask for financial performance, at least on an annual basis?
Correct. If there's a loan.
Okay. Well, how do you have negative cash flow if you don't have a loan then? That's not...
Well, that was a different example, but I was just saying, like, there's still property taxes, there's insurance, there's utilities. Well, folks, guess what? That taps into the formula I mentioned earlier. Timber, taxes, insurance, management, maintenance, utilities, reserves. And folks, you got to really understand, like, when you're investing in real estate, I didn't know that in the very, very beginning. And so I really, really learned as much as possible. I'm still learning today that you got to look at all those variables. And just because that gentleman has that property free and clear, he still has negative cash flow, because he has to pay insurance, he has to pay property taxes, and the utilities. If he wants to keep the lights on, the water, what have you, that's still negative cash flow. So folks, if you're making a lot of money out there, and I have folks, some of my friends reach out to me every now and then, they need a write-off. They're making, 6 figures, 7 figures, 8 figures. And folks, one of the best ways to do that is commercial real estate. And there's also this other thing called cost segregation. I mean, we could talk about a lot of different things, can't we, Susanna?
Yeah, that accelerated depreciation, even the 100% accelerated depreciation is coming back right now. So I think it's going to give commercial real estate an additional boost.
I totally agree. Well, that's enough on my part. I'd love to hear, you had that awesome conversation with, I think it was a couple of realtors you mentioned. Tell me more about that. I'd love to hear more.
Yeah, we were having brunch this morning, and actually it wasn't business related, but, we're all kind of investment minded group. And one person specifically was recounting the horrors of having to buy a house during a time, just even like 2019-ish, where rates were really low and you had multiple offers and you had to waive appraisal and waive financing contingencies. And then still you were going to be beat out by at least, 5 other offers, because there was 20 on the table. And, that experience, as traumatic that may have been for people who bought specifically residential real estate, but it really reshaped their mind to, holy cow, I really have to pay attention to the market when it's not great like it is now. Like you said, rates are high, but you're only dating the rate, right? You can marry the house now. And I actually had 2 people in that group that bought investments in this market because, number one, they do have some negotiating power, and it may not be crazy, although, you know, you have different opinions on where real estate market is going and how bad it really is. But if they believe in a specific area or they have other investments there, they're able to purchase, and they, you know, and maybe get a discount or maybe get some kind of other concessions, and they don't have to waive appraisal, and they've just waited out until rates come down. And if they don't, if it works on the rates today, this is the time to get into real estate, because if rates don't go up, you already know how your investment's going to perform. If rates come down, that is like an additional bonus.
You're right. You're right. You know, and so pay attention to that, folks. Like, you know, depending where you're at, in California specifically, the cash flow, sometimes the return on investment is not there, but the appreciation is. And you know, so some of the reasons why people invest in California is because the appreciation. You know, what historically we've seen is properties almost doubling every 7 to 10 years. And so really strategy is very, very, very important, folks. And again, the rates, look into it. Lenders are so much more conservative than ever, that if they say you're approved, not to worry. But if they say you're not approved, I mean, be careful. Maybe bring in a partner, maybe bring in somebody who's more seasoned, somebody who's more financial worthy, somebody who has the reserves. That's why I tell people all the time, commercial real estate is a team sport.
Absolutely. But just for the folks out there, if you want appreciation and you want to, you know, do the California market, which obviously has done great on appreciation. But I feel like if you want cash flow, for people who really love the cash flow benefit of investing in real estate, they almost have to go commercial. I had a conversation with a potential client from the Bay Area, and he was actually selling a residential investment property in the Bay Area, which that market is crazy, right? But he's like, I'm done with the residential. It's too hard to manage. And, you know, he wanted to kind of slow down, and he wanted cash flow, and he wanted it to be predictable. So he's actually going to switch to commercial, and he wanted a triple net, but we also revisited some light industrial and some other commercial assets. That is just such a good fit for somebody who didn't have the cash flow, but had the appreciation, is able to sell the asset and through a 1031 exchange, get into a commercial asset. And now you have that predictable cash flow, because the business owner that's going to lease your commercial property is not going to walk away from it. I'm not saying it never happens, because people do go out of business, but people's livelihood depend on them staying in that location. So, you know, that should give you a lot more confidence than a residential community that may or may not be more transient.
I love that. I'm so glad you pointed that out, Susanna, because that's another consideration, folks. Because if you're still on the fence, let me help convince you a little bit more. What Susanna talked about is what we call tenant improvements. And so, like, if you're considering an office building, a retail building, those are the exact reasons why. Because a business owner, a retail owner, they're going to make the improvements because they want clientele to come. Well, guess what? Those improvements aren't out of your pocket as an owner. Those improvements are coming out of your tenant. And that tenant believes that, hey, we want clientele. We're going to be here for as long as the lease is here, at least, and hoping to renew. So if they get into like a 3-year, a 5-year, a 7-year lease, they're planning to stay in business a long, long time. And again, those improvements will help increase the value of your property. Again, folks, commercial real estate. Anything else that you wanted to add, Susanna? I mean, I love that you just give me these golden nuggets to add to our audience, and going back and forth with you. I love it.
Well, here's the thing, Joe. You and I love commercial real estate, right? We love all real estate. Let's not discriminate here. Let's get real, right? Um, but I so enjoy opening the doors for people who may understand residential real estate, because everybody, needs a place to live and has had obviously exposure to that. To the commercial side of it, it's like, in a way, it's a very opaque kind of part of real estate, and not always easy to understand or access information on. So I would love to be a resource to you and your clients and the folks that are going to join us on in your event to learn more about it. And we're going to give them a good foundation. But in addition to that, we'll be available to answer questions about specific deals or specific ideas, or just specific things that aren't maybe, currently making sense to the folks that want to get into it. So I'm excited.
Yeah, I'm so glad you pointed that out. You mentioned a good key word there, where I'm not opposed, folks, to single family. I still own some single family, and just a small plug, guys, that I talk about it in my book. So in the beginning, if you're just starting out in real estate, start with single family. I mean, that's one of the easiest to get in, easiest to understand. You could get in at 3.5% down with FHA. If you're a veteran, maybe zero down, even 5% down. I mean, there's so many ways to get into single family, which could be your starting point. However, when you start to really understand some of these basics, now it's time to level up. And there's a lot of reasons why you want to level up, because economies of scale. I think it's less risky. You could mitigate your risk, and more write-offs, et cetera. There's so many more benefits to commercial real estate versus single family. So we're going to be talking about a lot about this at our event. We're going to go really, really deep. So if you're catching us on YouTube, please subscribe wherever that bell is, right? Join us on YouTube, because we're going to be posting like crazy. If you're watching on LinkedIn, feel free to connect with either one of us. We want to, add value. And again, I'm going to go ahead and share the screen where to register for our amazing event coming up. Feel free, folks, to register. We'd love to see you. And like Susanna said, we're going to be in person online, where you could ask us in real time what your questions or strategies or concerns are, right there on the spot. And as I mentioned, we're also having an attorney that really understands some of the ins and outs legally that you could even ask as well. So it's going to be a fun event. It's going to be jam-packed with incredible information. So feel free to register with a QR code. Anything else that you wanted to share there, Susanna?
Nope. I think we covered quite a bit today.
Beautiful, folks. So again, register right there with the QR code. It is less than a gym membership. I know some of these gyms are paying, you're investing a lot more in them. You got not much to lose, but so much to gain. So folks, stay tuned. We'll be on YouTube more often, LinkedIn, what have you. Feel free to reach out to either one of us. Take care. See you soon. Thanks so much, Susanna.
Nice to see you again, Joe.
Likewise. Have a great day. Bye-bye.
Bye-bye.